Today in crypto. Bitcoin's circulating supply has fallen near the end of 2021, with December representing the lowest month on average in years for BTC supply. The amount of Bitcoin in circulation has been falling since the halving in 2020, according to a new study from CryptoRank, with access to acquire Bitcoin on exchanges also declining. However, by the second half of 2020, around October, the supply of Bitcoin on exchanges stood for 9.5% of the overall quantity. This percentage had declined to 7.3% of all Bitcoin on wallet exchanges in July 2021, and only 6% of Bitcoin supply was accounted for on exchange wallets in December. Since the halving, Bitcoin's falling supply in circulation has been on a downward trajectory, with 1.3 million Bitcoin in circulation. The largest worldwide crypto platforms, according to CryptoRank's data, dominate the exchanges where Bitcoin is kept. However, it's worth noting that Coinbase, while still the most popular cryptocurrency exchange in terms of total Bitcoin held in its wallets, has lost some of its clout throughout the year. According to CryptoRank, Coinbase used to account for slightly over 50% of Bitcoin on wallets, but that number has subsequently decreased to 44.2%. Binance has approximately 25% of Bitcoin on exchanges held on its exchange, while Bitfinex is on the lowest rung with 14.6% of Bitcoin on exchanges held on its exchange. The announcement comes on the heels of a slew of bullish price indicators that coincide with Bitcoin's higher price movement. To begin with, the illiquid BTC supply has iced over for the winter, with a monthly supply of 100,000 BTC changing from a liquid to a illiquid state. Related article: Bitcoin breaks $51,000 again as 20k BTC flows out of exchanges. While many investors choose to retain their Bitcoin on exchanges, a technique known as hot storage, there is a risk that turning over the keys to your Bitcoin to an exchange or third party could leave your Bitcoin vulnerable to attack or hack. If Bitcoin is kept in cold storage or a combination of hot and cold storage, security procedures are in place to keep it as safe as possible from hacking. Despite this, Binance CEO Changpeng Zhao has indicated that storing keys on an exchange may provide more security guarantee. He noted, "Many hardcore cryptologs advocate storing your own keys. But the truth is, today most people are not able to secure key even from themselves, losing it. A trusted centralized exchange is #secure for most people." The numbers speak for themselves. This is despite Bitcoiners like Andreas Antonopoulos' best attempts to make "not your keys, not your Bitcoin" a daily BTC mantra. Related article: By the numbers, here's how much Bitcoin Michael Saylor holds. Pro-Bitcoin Senator Cynthia Lummis of the United States is planning to present a comprehensive crypto bill next year that will explain how different digital assets will be classified and taxed. Senator Cynthia Lummis, a Bitcoin evangelist, plans to introduce a comprehensive crypto bill in the new year. Lummis' proposed bill, according to Bloomberg, aims to establish regulatory clarity on stablecoins, instruct regulators on which cryptos belong to which asset classes, and provide consumer protections. In addition, the senator is said to have advocated forming an institution to regulate the crypto market under the joint jurisdiction of the Securities and Exchange Commission and the Commodity Futures Trading Commission. The bill would be one of Congress' first attempts to create comprehensive crypto legislation, and it would have to pass through a Senate that is divided on the issue. Meanwhile, officials at the Federal Reserve, the Treasury Department, and other agencies are considering their own regulations for various aspects of the cryptocurrency industry. On Twitter, Lummis urged Americans to contact their senators and encourage them to support the bill, adding that she was looking for bipartisan co-sponsors. Despite being a staunch conservative who voted against a commission to investigate the Capitol attack on January 6 and against impeaching the former president, the Wyoming worked with Democrats Mark Warner and Kyrsten Sinema to fix the definition of broker in the infrastructure bill signed into law in November. Welcome bipartisan co-sponsors. Please encourage your senator to reach out and consider it. Cynthia Lummis, at Cynthia Lummis, December 23, 2021. Any bill introduced in the Senate would need the support of at least 60 senators to be considered for a vote. Democrats currently have 50 of the Senate's 100 seats, with Vice President Kamala Harris acting as a tiebreaker in the event of a tie. Related article: Crypto needs regulation if it's going to survive, says SEC boss Loomis declared she purchased Bitcoin, BTC, worth between $50,001 and $100,000 as part of the Stop Trading on Congressional Knowledge Act, despite being a pro-Bitcoin advocate before being elected to the Senate. Loomis has been vocal about Bitcoin and its advantages, as well as her support for the technology. In November, the senator drew a line between Bitcoin and other cryptocurrencies, saying that the peer-to-peer monetary network is fully decentralized and clearly a commodity, while everything else has to be monitored differently, comparing their behavior to that of stocks. Loomis has previously chastised her colleagues for voting to raise the U.S. debt ceiling by $480 billion, stating that Bitcoin is a gift from God in the face of bad government policies. Her support for the crypto industry prompted her to write an op-ed for the New York Times, urging Congress to block the nominations of Jerome Powell and Lael Brainerd to the Federal Reserve Board of Governors because of their political approach to digital assets in her home state, which has passed a number of crypto-friendly laws. Related article: Paraguay's passes bill to regulate crypto, targets mining companies. Enter Changpeng Zhao aka CZ. The debate around Web3 that Jack Dorsey started keeps raging on. Crypto Twitter is burning with hot takes and killer responses. And it's time for Binance's CEO to enter the ring. He does it in a roundabout way, by defending the idea of entrepreneurs creating new coins. In fact, one could argue that he's not talking about the subject Dorsey brought up. However, the issuance of coins is a crucial part of Web3. And then, there's the title, "The One Coin to Rule Them All," or millions of coins. Article clearly goes to the root of the debate. Is Bitcoin the chosen one, or are we going to live in a multi-blockchain environment? Obviously, CZ is biased towards millions of coins. His Binance empire depends on trading, and the more coins there are, the more transactions. But that's beside the point. The real question is, can CZ make the case for coin creation? Let's see what the man has to say. Right from the gate, CZ, if you look at BNB, it raised $15 million equivalent in Bitcoin at the ICO. While that is a fantastic raise for a project as such in early stage, today, the total market cap of BNB is $90 billion USD, about 3,000x. Whatever camp you're on, the facts are the facts. CZ and his team created one of the most successful cryptocurrencies of the last few years with BNB. However, that coin is a very special case. They created it to be the native coin of the Binance ecosystem. Binance is not only the biggest exchange in the world, it also has the most activities, features, things to do. BNB powers all of that. How many coins support that huge of an ecosystem? How many coins have that many use cases? And yes, BNB provides its user with superpowers while in the Binance ecosystem and helps them save money. How many other coins can do the same? This is the most confusing part of the article. On the one hand, CZ claims it's good to reward the team with coins. The second small benefit is the coins the project team retains. In the case of BNB, the team allocation was about 40% of the coins, which is now worth $45 billion USD. While this sounds like a real sum, I dare say it is still just a small portion of the value you get from issuing a coin. And then, CZ claims that, in BNB's case, the team will burn those $45 billion. Note, the team allocation of BNB was and will never be distributed to any members on the team. The team has committed to burning them all, which makes BNB a fair launch coin, i.e., the team did not keep any tokens for themselves. All the BNB our team gets will be earned through providing our services. So, which is it, CZ? Did someone proofread this article? In any case, he keeps talking to entrepreneurs about the value you get from issuing a coin. That's not what the discussion is about. Evidently, creating money out of thin air benefits the one who does it. The discussion is about users and if investing in these coins benefits or puts them at risk. The real benefit of issuing a coin is it creates a whole new ecosystem, from user interactions to user retention, and development of the ecosystem. Is that a benefit for the user, CZ? He claims that in the traditional model, money flows one way only, from users to company to shareholders. In the case of tokens, the users hold them, so, when the price goes up, the token holders, your users, benefit. Thus, They are incentivized to use your platform more and get more friends onto your platform. They become your best salespeople. Okay, that's a benefit to users, but isn't CZ describing a pyramid scheme here? Maybe he isn't, but he's definitely still talking to entrepreneurs and entrepreneurs only. It creates a positive virtuous cycle, a very sticky ecosystem. You can't do this even with Bitcoin. You have to create a new token for your platform or ecosystem. Otherwise, you can't create a symbiotic growth environment with your users. In the case of BNB, you could argue the growth is symbiotic. Many users made and continue making a lot of money with BNB. How many coins are tied to a multi-million-dollar endeavor, though? What's the risk to users buying into projects that don't even have a product? And what about seigniorage? And aren't most of those tokens unregistered securities? What if they get regulated? Where does that leave the user? Even if this article is for entrepreneurs, it should have taken the users into account, because that's where the debate is, users' rights. However, credit where credit's due. CZ did give this solid advice. I advise you to not create a token until you have product market fit. Tokens should be an acceleration mechanism, after you have built a product that people want. Once you issue a token, it becomes harder to pivot your business. You have to get consent from your community. So, it is not ideal for trials, MVPs, minimum viable product, or the experimental stages. How many entrepreneurs will take CZ's recommendations, though? Former CEO of Twitter Jack Dorsey has been a Bitcoin bull for a while, and an occasional user on his social network. After leaving his position, Dorsey has gone into an all-out argument with the defenders of Web 3.0, venture capitalists, and centralized entities, one of which includes Ethereum, according to his judgment. Related reading: Dorsey, other personalities from in and outside the crypto industry joined the argument. Head of Consumer Product Marketing for Twitter Justin Taylor agreed with his former boss. Taylor argued, with a similar point than Dorsey's, that a user relies on big companies and centralized entities to access Web 3.0. In that sense, he added, this further contributes to Dorsey's argument that venture capitalists are moving in to take control of Ethereum and other blockchains, while the small guy gets a tiny fraction of the benefits, as depicted in the tweet below. In this regard, the former Twitter CEO is not alone, as many claimed the same about Solana and the apparent heavy investment VCs are pumping into its ecosystem. Related reading: is Solana getting a bump and dump by Chamath Palihapitiya? Previously, Dorsey warned users about the interest and alleged incentives aligned for big money to bet on the suite of technologies labeled as Web 3.0. After he founded Twitter with support from these investors, Dorsey claims he has learned a few things about how they operate. In its argument with Web 3.0 defenders and due to the high number of comments talking about Jack's motives for the change in the way he interacts via social media, the former Twitter CEO said to be focused on decentralized, secure, private foundations without single points of failure, i.e., Bitcoin. Of course, Tesla CEO Elon Musk didn't miss the opportunity to express his take on the matter. In reply to the tweet above, Musk said, "That's why I'm pro-Doge." The argument was inconclusive, and participants were unable to reach a consensus on Web 3.0. One thing seems certain: Jack Dorsey will be more public about his reasons to back Bitcoin from now on. Related reading: Coinbase CEO asks for true stablecoin. Jack Dorsey says, Bitcoin fixes this as of press time. Bitcoin, BTC, trades at $48,964 with sideways movement in the past day. During no other time of the year are humans more open to the idea of miracles than now. But what about a crypto Christmas miracle for Bitcoin? Rather than the miracle being the premise for a holiday flick, it is possible that the appearance of a backtestable technical signal puts in a miracle-esque bottom for the cryptocurrency market. Dozens of Hallmark-style holiday movies include the word miracle in their title. The idea that Santa Claus could hit the homes of children across the entire globe in one night demonstrates the type of hopeful sentiment that can build this time of year. Related reading: could Bitcoin benefit from a Santa Claus rally? Across the cryptocurrency market, investors got the equivalent of coal for Christmas. That is, unless a miracle happens. That miracle has a higher than average probability of happening this holiday, according to the Fisher Transform technical indicator on biggest 3-day time frames. This technical indicator has only shown such an extreme deviation 2 other times throughout its history, and when you read at what prices this signal triggered at previously, you won't help but become more hopeful for a Santa Claus rally over the next several days. The Fisher Transform is a technical indicator that was created by John F. Ehlers and, according to Investopedia, converts prices into a Gaussian normal distribution. Doing so makes spotting turning points a lot easier. Both extreme readings in standard deviation and the signal itself changing direction present a higher than normal probability point of reversal. When it comes to objective technical analysis, few technical indicators supply such regularly backtestable results as the Fisher Transform. The version of the Fisher Transform pictured above and below is a custom tool designed by Mo_Mentum WDI Fish Smooth and Divergence, available on a 2-week trial basis or $525 for lifetime use. On 3-day Btkist charts, the Fisher Transform is showing a potential reversal through turning around at the 2,0 deviation, a point of extremes reached only 2 other times prior. The first of the 2 instances was in October 2011 when Bitcoin was trading at around $2 per coin. The second was at the bear market bottom in December 2018. Now, some 3 years later, the extreme level has been reached again, just as the indicator starts turning around. Related reading: Bitcoin falls flat. Examining a rare bull market corrective pattern. The Fisher Transform is an unbounded indicator, meaning that it could very well reverse again and continue to a deeper deviation and extreme. However, doing so would only further increase the likelihood of a reversal further. This makes the Fisher Transform a helpful tool for those who trade using a mean reversion strategy and attempt to profit from when prices move to unusual extremes. Bitcoin price could still make another low while the Fisher Transform fails to do so. At that point, a bullish divergence would be possible and another buy signal potentially generated, again improving the chances of a positive outcome. Investopedia warns that the potentially lagging indicator could have several limitations. For example, asset prices are not normally distributed, therefore attempts to normalize prices could be inherently flawed and may not produce reliable signals. However, the Fisher Transform remains among the most statistically reliable though backtesting of data, especially when combined with other tools for confirmation. And these statistics show a Christmas crypto miracle could be on the way. #Bitcoin per D3, IFS reading one of the historical lows at OS. Region backtest shows that market was bottomed D3 at -2 deviation, was greater than October 2011 at $2,15, greater than December 15, 2018 at $3,135, Mo. At Mo_Mentum_, December 23, 2021. Follow at Tony Spilitrubsk on Twitter or join the Tony Tradesk Telegram for exclusive daily market insights and technical analysis education. Please note, content is educational and should not be considered investment advice. Hit the like button and subscribe to the channel.